Hey folks, Dan Frio here with your opening bell for May 29th, 2025. So you're trying to figure out what's going on with these things over here. That's what I'm trying to do as well. So in today's video, we're going to go through all the economic news that we have today that'll be affecting these and other parts of the market. The things we're going to headline right now, I don't know if you remember, the Federal Reserve, they're still in play and they're going to meet in 20 days. Here's the stuff that they look at. And these are some things that are getting filled in right now. So today we had the GDP come in and it wasn't good. Tomorrow we have the PCE coming in, the number one inflation number that the Federal Reserve monitors. We have that coming in as well. But the headlines that we have so far today are right through here. The economy shrank by 2.2%. Jobless claims, they actually are at a 5-week high. And then we also have those tariffs. Those tariffs just got shot down by a judge. How long is that going to last? Is it going to be put in place for permanently? Well, let's go over and see how all these are going to affect these things today. So let's get to it. My name is Dan Frio. I actually do this report 2 times a day to inform you guys what's going on with these things over here. We have so far in the headlines right now is this. The economy shrank by 0.2%, which you can see right through here. It's already been headlined through the economy at a glance. So that's coming down. We also have some numbers on the employment numbers. I'll go through that in a second, or the unemployment numbers. And then we have the PCE, the number one inflation number that the Federal Reserve monitors. It's coming out tomorrow. So we know the economy shrunk a little bit. How long is that going to last and what's going to happen with that? Well, we're going to monitor that. But the big news right now is the jobs numbers. What the economy is, or the economists are saying is the economy is starting to shrink. And we're seeing that through the GDP. So what's going to happen next is you're going to see the job market or the jobless claims spiking. So what happened just now? Well, they just hit a 5-week high. Should you be really concerned about this? Well, yeah, but if you look into the details specifically, there was a reason why this reading was a little bit low. Maybe. Here's what the headlines are telling us. The number of people who applied for unemployment benefits last week rose 14,000 to a 5-week high of $240,000, or 240,000, the government said. Yet the increase appears to be tied to the end of the school year and the Memorial Day holiday. So we're going to maybe have to wait until the next reading comes out to see if this was an anomaly, but it might not be. Okay, so the last piece of this puzzle we want to look at is the Trump trade, the Trump tariff stuff. So now a federal judge, I don't know what state it came in, I think it was in D.C., they came in and said it's illegal. He cannot do this. Well, he's going to probably find a way around it, but here's what it's saying. The U.S. Court of International Trade has voted to block the vast majority of President Trump's tariffs. But if you go down through here, here's what Goldman Sachs is telling us. This ruling represents a setback for the administration's tariff plans and increases uncertainty, but might not change the final outcome for most U.S. trade partners. For now, we expect the Trump administration will find other ways to impose the tariffs. It's like other countries figuring out other ways to get around the tariffs. Well, the administration will probably fight this, and then they'll find other ways to put this into place. So don't let this maybe short rally in the bond market or stock market really influence you in any which way. So just want to make sure you understand that. That might be short-lived, because here's what's going on in the markets right now. This was basically, we were across the board. We were green. Now we're getting a little bit of red in the Dow Jones. A lot of people looked into this saying, okay, the tariffs are off. All these other things are coming down. The jobless claims are coming up. So the Fed's going to cut, but you have to wait. Look, what just happened? This went from a negative 12 to a positive 52. So it depends on when you check these things, kind of like when you check rates. But across the board, we have the indices completely up across the board. We have the VIX up just a tad at 19. Nothing to scare you about. This gives us the anxiety level on Wall Street. Okay, so that's what we're seeing there. But what you're really focused in on is right through here. We want to see what's going on in the bond market, because this bond right through here, specific bond, is actually figures out your mortgage rate. So let's get over to it. This is what we call an MBS, a mortgage-backed security bond. How to understand this. Let me just educate you guys on Bonds 101. I just want to show you how this works. Okay, so when you're looking at a normal bond, this is the 10-year Treasury, and this is it gives you this 4.444. What is that? Well, that's the yield. Okay, so that's the yield on that. But if you look at a mortgage bond, it's a little bit different. It gives you 98.85. Well, that's the price. So then we have to figure out, well, this price is doing what, and what's that doing to the rates? Well, let me explain it to you. As the price goes up, rates come down. As prices go down, rates go up. Let me explain it to you in the simplest way I can. Let me show you how when it goes up, it basically the rates come down. When the prices go up, yields come down. Let me give you a real simple example. We have a mortgage bond. It's this bond right up through here, and it has a face value of $100. Okay, so whoever holds that bond, when it comes to maturity and they turn it in, you're going to get $100. Okay, so what happens is, let's say I buy this bond from you and I buy it for $50. Okay, so I buy the bond from you, I give you $50 and you give me $100. Okay, I wait till the maturity of that bond. The bond matures, I hand it back, and you give me $100. That's how the bond works. Okay, so what was my yield? Well, I doubled my money. So I got 100% yield. Okay, so now let's turn this around. Let me boost the price up like we're seeing today. Okay, so let me make it as simple as I can. I'll give you $100. So when I bought that bond from you, instead of giving you $50, I gave you $100, a higher price. Okay, so I give you $100, I got the bond. I hold that till maturity. What happens is at maturity, I give you the bond back, you give me my $100 back. We had a higher price. What did it do to my yield? Well, my yield at that point was zero. I give you $100. You give me $100 back. So as the price goes up, the yield or your mortgage rate in general will come down. That's how this works. So this is a nice rally today. We had a nice rally even yesterday. You know, we had this market go here. It kind of ended flat. But look at this gap that we filled in. Remember, I talk about gaps a lot of times? We filled the gap this morning and it was up away from there. Look at a 5-day chart. This is a big rally. So if you locked in your rate down here, the rates are going to be lower today because this bond rallied. How do you reach out and find out, can I get a better deal now that I locked in? Or maybe I just got a quote. Where can I get another quote? I'll give you that here in 1 second, because the last thing we need to do is go over the economic calendar for the week. What we got today and what we're going to get tomorrow. And this is going to fill in the rest of the gaps, or most pieces of the gaps that we're going to see right over through here with the Federal Reserve monitors. Okay, so let's get to the economic calendar for tomorrow. So today we had the GDP. It went down 0.2, like I said. We had the initial jobless claims spiked up a little bit, but 14,000 they're saying is due to the holiday. And then tomorrow we got the PCE year over year and month over month. It's going to fill in the gap, the rest of the gap right through here. So this is going to be a big number. So we'll actually have two pieces of the three pieces of this puzzle filled in this week alone in regards to what the Federal Reserve is going to do. And remember, the Federal Reserve's meeting in 2 to 3 weeks from now. They do still play a crucial role in all of this. So back to me. My name is Dan Frio. What do I do and how do I do things? We have a slogan. It's one application, one credit pool. We're going to shop your loan over 30 different lenders. Now that's what we do here on my team. So what happens is I work at a federal bank. I'm a federally licensed mortgage loan officer. But the unique thing about this is we're set up with 3,300 other lenders. Think of us as a federal bank that's a large brokerage. So we're everywhere in the whole country. Plus, we have many, many opportunities for you to use all those lenders. How do you do that? Well, just go to the rateupdate.com. You can put in your application right above my head. You can schedule a consultation. You can even give us a call. But let's say you're locked out there, or you have a question for me. You're like, hey, Dan, can you look at this loan estimate? I'd love to do that for you. Or you can just give me a call. Let's go over your scenario for you just to see, do you qualify and what would you qualify for? So shoot me an email. My email address is dan@therateupdate.com, or just give us a call at 844-775-5626 to get started. Thanks for watching, folks. Have a great day, and I'll be back later today for the closing bell to let you know how this mess ends for the day. But so far, looking pretty good. See you next time.